with COVID-19 was a year of great upheaval in the markets. However, for the Bermuda Monetary Authority, this was a year that I would be described as a year of resilience and innovation. The authority managed operationally to continue to implement and effectively regulate and supervise the companies in our market. The authority has continued to align its frameworks to international standards, and in some cases, the authority has chosen to be market leaders. This is more so in the area of innovation. I'd like to invite everyone to this webinar that tackles or seeks to speak to some of these areas that the authority worked on in 2020 and the authority continues to excel in. This morning, we are joined by 3 subject matter experts from the organization. The chat is going to be led by Morad Fahmy, who is our senior advisor for Fintech. Morad is going to be speaking to a number of our subject matter experts, including George Alayon, who leads our Insurance Innovation Group, Aksa Zubair, who is in our Fintech team, and Melissa Burgess, who leads our Licensing and Authorizations team. Welcome, everyone, and I look forward to the discussion this morning.
Thank you, Gerald. Well, let's kick this off. As a regulator, the authority has an elaborate enterprise risk management and crisis management function, but still, in 2020, like the rest of the world, the rapid evolution of COVID-19 put our readiness to the test. So what was the impact of COVID-19 on the authority, and what long-lasting changes can we expect from it? Maybe, Melissa, we could hear from you on this.
Thank you, Muad. Back in March, the authority transitioned to a completely remote work environment. We very quickly established a mailbox where we could accept licensing and authorizations applications. So operationally, the transition was pretty seamless for us. I would say the biggest impact for us was, or the biggest adjustment for us was adapting the way that we connect with one another. Within the authority, we apply a multidisciplinary approach when we are implementing our supervisory and regulatory frameworks. There's quite a bit of collaboration across the respective teams. So platforms such as Microsoft Teams and Zoom have become an integral part of the way that we connect with one another, and also the way that we connect with the sector. Despite the constraints that have arisen as a result of the pandemic, the authority has been able to continue to effectively regulate and supervise the sector. And when we consider the volume of activity that we've seen since March, and I'm referring to the number of transactions that we've considered, the number of meetings that we've accommodated, and also the number of new insurance companies that we've licensed, as well as the amount of training that staff have participated in, it actually speaks to each individual staff member's commitment to ensuring that the authority delivers on its mission, which is to enhance and protect Bermuda's reputation as a leading international financial services center.
Right, thank you. And what about the impact of COVID-19 on the insurance sector itself? So the authority has been able to continue its operation, but is there a silver lining to the pandemic as to what happened in the insurance sector?
Absolutely. By early 2020, our insurance sector had implemented business continuity strategies, with most of our insurers having transitioned to a remote work environment. However, in order for us to better understand the impact that the pandemic had on our registrants, we required our registrants to complete a COVID-19 emerging risk template. And whilst most of our insurers were still reviewing their operations in response to the pandemic, our discussions with our registrants, as well as the results of the survey, indicated that our market was really resilient from a solvency and liquidity perspective, as well as from an operational perspective. However, the results of the survey did highlight the need for us to focus our supervisory resources on those insurers that operate in key industries that have been most impacted by the pandemic. And I'm referring to industries such as entertainment, hospitality, and also transportation. The survey results and our discussions with the firms indicate that whilst the pandemic is likely to have a significant impact on the earnings of our registrants, it's unlikely to trigger a capital event. And there's also uncertainty around the extent to which losses arising as a result of business interruption will put some less well capitalized insurers under strain. Having said that, the authority continues to monitor the situation as it evolves, and we will adapt our regulatory and supervisory processes as more information becomes available. While there's no significant changes that we envision in terms of how we regulate and supervise our registrants, there will be focus on certain areas in particular where there could be heightened risk as a result of the pandemic. And I'm referring to those captives that may have significant loans to parent. If those balances become impaired as a result of the pandemic, there could be solvency and liquidity issues that arise. We'll also focus on insurers whose parents operate in those industries that have had greater exposure to the pandemic. Earlier, I referred to transportation, entertainment, as well as the hospitality industries. Those insurers may have challenges accessing additional capital should the need arise. And we'll also request additional information from certain vulnerable entities so that we can facilitate effective supervision and monitoring of those entities' exposures. Another area where we will place increased scrutiny is dividends and capital distributions. These will need to be approached with caution, and they will need to be informed by stress tests. And this is to ensure that the underwriting and the financial exposures from the pandemic have been taken into consideration prior to the authority approving any of those distributions. And finally, the authority has also enhanced the framework in the area of operational cyber supervision. We've increased our focus on mitigation and management of cyber risk, which has increased in line with the increased usage of remote working platforms. The insurance sector cyber code of practice comes into effect January 1, 2021. However, cyber incident reporting, which is an element of the code, has already come into effect. Now, the authority will apply a proportionate approach in terms of our implementation of the code, because we appreciate that our registrants have different risk profiles depending on the nature, the scale, and the complexity of their operations. And those insurers that place a reliance on insurance managers who are providing services that may be exposed to cyber risk can rely on those insurance managers confirming that their services that they provide are in compliance with our code.
So just to also add to that, what Melissa has already stated, the authority also published a notice to the industry about remote working in June, reinforcing the guidelines outlined in the Insurance Cyber Code of Conduct, as well as some practical tips to the industry on cybersecurity, emphasizing the IT risks associated with the shift to remote working. As you remember, in that notice, we also placed emphasis on a number of things, particularly disaster recovery and business continuity planning guidelines, the use of multi-factor authentication, the use of multiple levels of protection, regular scanning of the network, and then just really having a robust crisis management team to ensure that the third-party suppliers and providers apply appropriate controls.
Thanks, George. Yeah, I think the remote working in the virtual environment we operate in now, it definitely brought its a lot of challenges. I'd definitely rather be physically with all of you and our industry participants, but overall I think the main message that you guys have mentioned around resilience is very important. Have you seen an increase or decrease in the new licenses during COVID? Is there an opportunity that may exist from a regulatory standpoint?
So there's definitely been an increase in licensing and authorizations activity across the board. We regularly meet with prospects virtually to discuss their plans, and we invite companies to provide their draft business plans so that we have an opportunity to provide feedback ahead of the final application being submitted. And this has been welcomed by the sector because it promotes speed to market. Once those applications are filed with the authority, they already incorporate the feedback that's been provided, which allows for a much smoother application process. And in regards to the licensing of new insurance companies, the Assessment and Licensing Committee, which is the company that reviews the new applications, that process has been uninterrupted. We continue to meet virtually on a Friday. The applications come in by end of day Monday. And there's a pre-meeting on the Wednesday where we take the opportunity to address any gaps in the application so that the information can be filed ahead of the Friday meeting. We have had approximately 55 new licenses issued under the Insurance Act in 2020, which is comparable to the volume that we saw in 2019. I would say the SPI class has recorded the biggest increase in new licenses, having seen 24 new licenses issued in 2020. And we've also seen interest in our new collateralized insurer class as well. Now, this class offers a bit more flexibility to those insurers that are writing fully collateralized and fully funded insurance business. Those companies that may not fit into the SPI class because of the strict parameters around those licensees, and I'm referring primarily to the types of assets that are permitted in the SPI class. Now, those insurance companies have the option of licensing within the collateralized insurer class. We've seen interest in the use of incorporated segregated account structures as well. Incorporated segregated accounts companies are unique in the sense that the incorporated segregated account company and also the incorporated segregated accounts are legal persons. They're separate legal persons. They have their own legal personality, and so they can contract on their own behalf. They can also contract with one another. There's greater legal certainty when it comes to the segregation of assets and liabilities. And you can also wind down an incorporated segregated account without disrupting the other ISAs or ISACs within the structure. I can definitely say the silver lining is the fact that the volume of activity that we've seen affirms the confidence that the market has in our ability to accommodate risk solutions whilst maintaining the same very high standard of regulation and supervision. And this definitely positions Bermuda to emerge out of this pandemic really strong.
Okay, so that's very good to hear. AXA, from your side in fintech, what type of activity have we seen on the licensing side? Have we seen an increase, a decrease, a status quo?
Yeah, thank you for that, Moad. I think on the licensing side for the fintech sector, we've seen an array of different types of license classes or applicants throughout 2020. These activities span those originally in the Digital Asset Business Act 2018, but also those additional activities that were included in the Digital Asset Amendment Act 2019, such as derivatives exchanges and so on. I think it's important to mention that even though we're in a pandemic era, the flow of license applications hasn't actually slowed down. And interestingly, in any case, the fintech sector, they've kind of sped up. We're dealing with institutions that are heavily digital, they're lean, they're agile in nature. And so they've been able to gather the resources and apply for a license respectively, irrespective of the time period that we're actually in. And because we've remained available via digital channels, we've been able to have that active dialogue with these entities and push that dial forward.
Yeah, we can definitely say that, fintech companies are always on the lookout for opportunities. So, I think this environment has created some of these opportunities. So it's good to see the innovation at play. George, opportunities also exist to create regulatory frameworks adapted to the reality of these innovative companies, right? That move very quickly. Can you give a brief summary of the initiatives that the BMA makes available for innovators in the market?
Sure. So one of our key initiatives was to establish the regime for our regulatory sandbox and innovation hub, and we've done this back in 2018, right? You know, in the same year when the Digital Asset Business Act was also implemented. This allowed us to have a closer dialogue with the market innovators, and be of help to them by giving them the appropriate regulatory guidance. So essentially, we have a uh, parallel innovation tracks. One is the regulatory sandbox, which is a licensing regime for companies that want to do licensable activities as defined under the Insurance Act. And then secondly, we have an alternative innovation hub track, which is similar to the sandbox as well, because it looks to test out new technologies or business model, but it's applicable for companies that are either one not currently captured under the Insurance Act or any other financial acts that we regulate, or those that are captured currently by the acts, but they are not yet ready for live testing, or they're still developing their proof of concept. So this way, we aim to cover both the licensable activities and the non-licensable activities, that are relevant to the industries, while at the same time covering catering to everyone regardless of where they're coming from in terms of producing their business plan or being able to test their proof of concept. Additionally, we have introduced new insurance classes to the market. For example, the insurance marketplace provider, which is a new intermediary that we have introduced last year. And then we have the class IIGB, which caters to innovative business models for general business, such as those that relate to crypto or digital asset, which you guys have are that don't necessarily fit our traditional classes. This year as well, we have actively reached out to the market to increase awareness and education on all these things that the BMA is doing. We have engaged with the audit firms, law firms, and other service providers. And I think I brought you and AXA in a few of this. So it was just really a good exercise for us to reach out to the rest of the industry to make sure that we're taking care not just the innovative companies but also the traditional players, so that they're aware that of what we are doing right now, what our goals are, and also to get feedback from them in their experience with the Sandbox and Innovation Hub. So I think from my perspective, the authority has done what it can to make itself available and accessible to both sides despite the pandemic.
Right. I think that's very important, right? This digital transformation is impacting, large incumbent companies as well as startup companies. So how do we make sure that we provide the right tools for, the entire set of players in the market is something that we spend a lot of time talking about. So sandboxes and new regulatory approaches provide learning opportunities for the market. But on the flip side, there's also this opportunity for the regulator to better understand how the financial sector transforms itself. Can you give some color as to what is happening in the sandbox under the hood, and what are some of the learnings so far?
Sure. Since its implementation in 2018, we have seen a number of proposed business models attempting to enter our regulatory sandbox. Some of the companies we have in our sandbox right now are seeking to create an electronic platform to trade insurance risk between the various players in the industry. So this is on top of what the brokers or agents and managers are currently doing. This type of innovation that we have seen led us actually to the introduction of this new class of intermediary, the marketplace provider. And the goal is to fill in the gaps that we are seeing with their technological solution. Another entity focuses on the distribution channel. So from the placement cycle to claims management to reinsurance to getting the capitals themselves, just going through all that process using a permission blockchain technology, which is more appropriate for B2B or business to business corporate transactions, which is really great for Bermuda being a largely a reinsurance market. We are also looking for a company that adopts a digital first approach for its operations, while at the same time utilizing digital assets. And I know AXA was also very active in engaging with us in this particular company, because essentially they use this digital asset to both one, admit the participants, get everybody into the network, and as well as use the same digital asset to, as a medium of exchange for their insurance transactions. And while our first company is still in the process of graduating from the Sandbox, by the end of this year, hopefully, we have learned a lot as a regulator, by interacting with these companies. The formation of my small innovation unit is a testament to that need for a focused and dedicated team within the BMA to supervise these companies, because they just take time and a lot of resources for us to do that. We also have to evolve in terms of how we communicate to these companies, in the way we process the information received from them, as well as how we perform and our analytical reviews and the pace in which we respond to them. Another learning I can share is that innovation can come from different angles. Although most of the innovations that we see in the news tend to come from the technology side, actually, behind all these blurbs and smokes in the news, they can also be driven by the incumbents themselves, as well as the capital providers. And I believe our framework can accommodate any innovation regardless of the source. We have also learned that these innovative ideas point towards an even greater convergence of the financial services sector in the future. So, the skill set and the approach of today's regulators, it has to be broad enough to see the full spectrum of risks inherent in these new models. And then finally, we have learned that the regulatory landscape must move away, with the times. If we want to stay relevant in the next decade, we will have to constantly adapt and accept that uncertainties and changes will never go away. And we have to learn to live with those uncertainties and be more fluid with our decision making. Our frameworks will have to evolve from a tick box exercise, from forms to complete and general standards to check against, to a more customized or fit for purpose and tailored, but also at the same time, a technology driven supervisory approach.
Great. Thanks, George. I think these learnings are probably part of a cycle, right? So how do you apply these learnings to the supervisory approach? How does the supervisory approach generally differ, in a sandbox from the regular license, and, how fast it moves with those learnings?
That's a great point, Muad, because it speaks to really what we are trying to do here. So for Sandbox companies, there is a tailor-made legislative requirement. So the good thing with us is that we have a licensing regime at the onset. So we have all the powers behind us to put the conditions and other parameters around where the Sandbox companies can operate. So with that set of fences and perimeters to control the risk, that sort of gives us a hint of where we should go in terms of the supervisory approach. So meaning there's more frequent regular calls or meetings, usually on a monthly basis at least, setting of KPIs and metrics at the onset. So when we speak to them, we give them the license. We develop the KPIs from operational perspective, business perspective, as well as from the regulatory perspective. So we agree with them, and this become the basis for our supervision. We also require this to these companies to have a regular submission to us in a format that we set as well. Another thing I can say is that for these companies, we need to have full access or transparency to their platform. So usually, if it's a blockchain-based technology, we normally would become part of the node itself, or have an API that connects and gives us that visibility to what they're doing under the hood. So another thing as well, which is very important for Sandbox, is that we have a set timeline for their to achieve their objectives. So normally it's around 6 months to 12 months. So overall supervisory approach is aligned to build the infrastructures necessary to meet the intended full license requirement. So our goal is to get these companies ready so that when they graduate and move on to that full license that they are aiming for, then they're ready and they're going to operate even without the authority's supervision. So that's the Sandbox. Whereas the full licenses, as you know, we normally require more of them during the licensing stage. We expect more of the, the foot on the ground, the things that they have to be implemented at the onset. and on that basis, we don't necessarily go on on their backs every single time. So they are allowed to operate more freely and just have that usual touch points with us in their year-end reporting and all that. So that's my quick overview of the differences in the approach.
Thanks, that's helpful. AXA, on your side, the Digital Asset Business Act celebrated its second anniversary in 2020. Can you provide a quick overview of what DABA is? So Digital Asset Business Act is, for those that are not familiar, and perhaps discuss some of the main achievements of the last 2 years. It's been, I think, exciting times, but perhaps if you could just wrap this up for us.
Yeah, thank you for that, Moad. I think at this point, before I dive into the framework specifically, I think it's important to echo Melissa and George's comments from insurance and really carry them over to the fintech sector as well. To mention that we have been and remain open for business throughout COVID-19. We are readily available to our applicants through digital channels, as I mentioned before. So a lot of the market will be privy to and have probably participated in our recent office hours that we have continued to conduct supervisory related activities in that same manner. So at the BMA, adapting with the times is really in our ethos, and I think George really alluded to this as well. And that's really carried over to the way that we've chosen to regulate the digital asset business sector. So our framework for digital assets is unlike any other that we may see around the world. We are celebrating, as you mentioned, our second anniversary this year. And when we built our regime, we understood the need to ensure it evolves with market developments, to ensure that it remains fit for purpose and continues to serve those that it was intended to serve. As such, a regulatory framework is largely iterative, right? So the Digital Asset Business Act was developed with market consultation in 2018, and it made available 2 license classes for those seeking an environment to scale up their operations. So the Sandbox license at the time, the Class M, and for those seeking to grow their operations in or from within Bermuda, which is the Class F or full license. And DABA was released with the relevant rules, codes, and guidance notes. And subsequent to that, as the market would know, the Initial Coin Offering Act was also released that same year. However, the ICO Act remained within the remit with the Registrar of Companies at the time. So since then, the Digital Asset Business Act has been amended to include additional licensable activities. And also we've released the, after public consultation, an industry first, which is the Digital Asset Custody Code of Practice. And this was really to provide more clarity to the digital asset industry as to what the standards the authority expects when considering whether a custodian is providing an acceptable level of care when safeguarding client assets. This has actually gone on to be served as an inspiration across jurisdictions worldwide, that for jurisdictions that are looking to really build up their regime. So the Custody Code of Practice was really an industry first in that regard. And in 2020, we saw further updates, including the replacement of the Initial Coin Offering Act with the Digital Asset Issuance Act, which is now in the remit of the BMA. So at the BMA, we now regulate the full spectrum of digital asset business activities, or that ecosystem really in Bermuda. We also now intend to introduce a new class of license, and so I'm sure the market has heard buzz of this already. It's the Class T license within DABA, so there will be a total of 3 license classes that will be offered with the regime. The T license or test license is really intended to serve as a test for those institutions that are looking to build their proof of concepts and test with a limited pool of participants. The M license is then intended to serve as a scale up for companies that are looking to operate in an akin to Sandbox environment, and the F license for those mature organizations that are looking to grow further.
That's very interesting. So what's the difference between the T license and the M license, for example? What are some of the benefits of introducing that T license?
So the T license is really small scale, right? It's really for those institutions that are looking to build their proof of concepts and really trying to build up their tech framework and have compliance really built into their code. Whereas the M license is somewhat of a mature organization that's looking to kind of understand how to grow and looking to seek a jurisdiction that has legal certainty in this regard to kind of assist with that growth.
And I think George alluded to this earlier, right? We're seeing, market convergence, between sectors, not only insurance and digital asset, but also investments and digital assets, and potentially even banks and digital assets. Can you comment on how the Bermuda model makes it fit for purpose for these types of convergence?
Yeah, and I think that's a really great question because globally we're seeing an array of convergences between market verticals and as we delve into an increasingly digital era. So when we talk about fintech and we break down the fin, it really comprises of a suite of sectors within financial services. So that can be payments, insurance, lending, banking, and so on. The market is increasingly becoming problems focused. So we're breaking down those sectoral silos to identify the best possible solution to any problem. And with that, we're seeing startups and incumbents alike exploring solutions that are actually spanning multiple regulated sectors. So George alluded to a company that was, heavily co-supervised from both insurance and digital assets, and that really is the future of this space. So in Bermuda, we know that we're an integrated financial services regulator and the sole regulator for financial services here. So when entrepreneurs are looking to build or expand on solutions spanning regulated financial sectors, they deal with one regulator from application through to supervision. One regulator deals with all of the applications that come in, and we have really adopted a one BMA mindset, wherein all of the departments internally speak to one another so that we have a coordinated approach to market. We additionally have Sandbox licenses available for those entities that are looking to build or test their concepts or even scale their operations, making Bermuda a really good jurisdiction for those that are wishing to not be boxed into any specific category and have that ability to innovate across sectors.
Yeah, so that's really a great insight, Aksa, and I think I'm really seeing that in all these trends that are doing now with DeFi or decentralized finance on the rise, and I think this move of us taking over the regulation of the digital asset issuance or ICO sector, it's gonna bring in a lot of a lot of these convergences. So as you said, not really just boxing a single entity into one sector, but allowing them to move this borderless, cross sector, cross jurisdictional convergences. So yeah, I'm that's really one of those things that gets me excited.
Yeah, that's very interesting, right? When we think about financial consumers, usually, they're not, when they think about their goals, right? They have general goals like retire or buy a car or insure their home, but like they don't necessarily think in terms of products. So I think this convergence is also this reflection of how do we better serve these financial consumers when they think about what they want as a consumer, and usually the answer is not a product itself, right? There's a need behind it that can be served in multiple ways. So Axa, what is something that you're excited about when you think about the future of the digital asset industry?
Yeah, and I actually really like that question because there are a lot of ideas that excite me about the future of the industry, but perhaps for this webinar, I'll just focus on two of them. So the first one really is the uses of blockchain technology as a core infrastructure of everyday applications, such that the user enjoys the merits of the technology. So as we know, that's like security, privacy, immutability of the data, et cetera, without really needing to delve into the specifics of how the technology actually works, which is kind of what we're seeing today. So with this, we'd find important financial services products being built atop blockchain infrastructure developed. We would increasingly see mass participation in the ecosystem for it to grow, evolve, and actually enhance further. The second is the continuation of the building of global standards in this industry with our ecosystem internationally. So that ecosystem spans regulators, entrepreneurs, academia, government, and more. And as the BMA, we've actually been privy to participation in a lot of these global institutions. So we are an active member of the Global Financial Innovation Network, which is called the GFIN for short. So this organization comprises of 60 plus regulatory organizations around the world. And within the GFIN, we're active members of two specific work streams I'd like to mention. So one is the cross-border testing work stream, which is a global sandbox initiative with 23 other regulators, wherein entrepreneurs can apply to scale up across jurisdictions in a consolidated manner, and then benefit from joint supervision across borders. And the second one that we're an active part of within the GFIN is the RegTech and SoupTech workstream, which allows us to kind of conceptualize with other regulators and build solutions around how we can kind of effectively improve our own regulatory operations in this process. I think important to understand is that we need to actively participate and act like the market that we regulate, such that we kind of remain prudent and kind of serve as those that can actively apply those guidelines for the market. Beyond the GFIN as well, we're active participants in other groups like Global Digital Finance, or GDF for short, where we provide and solicit expert opinion on the building of these regulatory frameworks in the digital asset space. And for those that are in the blockchain sector, Chatham House rules are absolutely applied. So kind of whatever happens and in these conversations stays within the confines, but allows us as regulators to kind of speak to one another and grow our offerings. So these are some areas that I'm really excited about. And then, so ideas that really further the mass adoption, but also those that additionally allow for the regulator of the future to really emerge.
Yeah, I really like that. Just to add as well, it's so I work with AXA as well on the GFIN participation. So it's really a great strategy for us to be out there actively working on these two initiatives, and I think it just really speaks to our desire to be out there, to be leading on this front. In the insurance side, we do participate in a lot of international forums. We do that already in the traditional way of doing things, but having this dedicated forum to focus on RegTech and SupTech. So one is addressing the internal operations of the regulator. So we're really seeking to work together in building, like maybe a cohesive regulatory system that addresses globalization. And at the same time, the second one is the market development. So my Sandbox here in Bermuda will now have its access to firms being able to test worldwide. So it's really a great initiative to be in.
Thanks, George, and thanks, AXA. So regarding this this global sandbox, the cross-sectoral testing that's currently open for applications right now, for people that are listening in Bermuda but also abroad, can you remind them what the deadline is for application?
Yeah, so the deadline for application is December 31st of this year. This is really the second cohort of the work stream that we're running this year. That is a deadline, and then firms should seek to kind of have a response from us within Q1 of 2020. I think I just really want to emphasize as well that the sandbox is open to all sectors. So as Bermuda and the BMA specifically, like we're really interested in insurance and digital assets given our expertise, but it's really open to all players across the financial services landscape, including those that appear to be tech players but are catering to financial services. We might call them tech fins.
Great. Well, thank you for that. So yeah, it really shows that this has been a year of resilience and innovation, Gerald. I think the work that the team has done has been incredible this year.
Absolutely, Maureen. COVID-19 has brought a tremendous amount of uncertainty to the markets, and still quite a bit of that uncertainty remains. However, as Melissa and George mentioned, our assessment of our market and the companies that operate in our market is that they continue to be resilient. Bermuda has often been described as the risk capital of the world, and in eras of great uncertainty, risk increases, and that makes Bermuda a lot more relevant. The pace of change, especially technology, as you've heard from AXA and George, continues to increase exponentially. The BMA cannot afford to be left behind as that change happens. And the way the BMA has chosen to respond to both the uncertainty in the market and to the exponential change and innovation, the exponential change in technology, is by setting up regulatory standards and supervisory practices that are structured such that they are robust enough to address any sort of financial services sector vulnerabilities. The BMA continues to be razor focused on protecting policyholders, razor focused on protecting customers, and also the reputation of the jurisdiction. However, we are also focused on ensuring that our supervisory practices, as you've heard, are pragmatic enough to facilitate growth in the market, to facilitate the addition of insurance capacity, and especially in these times of uncertainty and COVID, where capacities in the market has reduced. We see our role as being a facilitator of innovation, and we see ourselves as not standing in the way of innovation. However, we see our role as being able to facilitate that, while, as I said, ensuring that we are still focused on customers being protected and policyholders being protected. And the way we do that is by understanding what our market is doing and understanding our markets, as you have heard from this team. Thank you very much, Moad, George, Melissa, and Aksa for all your insights this morning. And I would urge everyone to watch this space. We will have some more additional webinars and a regulatory forum next year. Thanks, everyone, and enjoy the rest of your day.